Muthoot Capital saw its bottom line drop by more than 20% despite a rise in net interest income. So was it an outcome of the sharp drop in auto sales which have continued, especially two-wheelers, Muthoot Capital's mainstay, or was it was the part of it also due to the higher impairment in the quarter gone by? Let's pose that question to Madhu Alexiouse, the Chief Operating Officer of Muthoot Capital Services, joins us right now on the show. Madhu, good having you. Thanks so much for taking the time out. Could you sum up the quarter for us? Was it a quarter which was a continuation of some of the pain that the space has been seeing, but the pain showing signs of ebbing out? Is that how you would sum up, or is there something more to it?
Good morning, Neeraj. Thanks for the opportunity to come back again to your channel. Last time when we had met, and I was mentioning that there had been pains in two-wheeler industry in retail financing business. But what we have witnessed is during Q1 and Q2, it was bottoming out, and Q3 is something where we believe that things were looking better. October month was really good, one of the best months of this particular financial year. The vehicles sold were more than 17 lakhs, and then November was also better. December there was a sharp decline for whatever reasons, and I've been telling due to model change and things like that, and the confusion of BS4, BS6, the volumes were under pressure. Q4 also would look slightly, because the BS4 vehicle need to be cleared off and BS6 vehicles are getting launched. So I'm saying that between Q1, Q2, Q3, we saw things bottoming out, and from profitability perspective, in fact, we have sequentially, QOQ, we have done better compared to Q2. In terms of our book growth, in terms of our revenue, we have done better compared to Q1 and Q2. So the headline for us and how we look at it is that things are now stable in terms of our NPAs, in terms of our collections. Also, we have seen slightly better Q3. Pain is not out, pain is still there, but I think that things would, and in fact, things are looking better compared to what we have seen in last 2 to 3 quarters.
Could you qualify better? I mean, what segments or what is it that is leading you to believe this? And if indeed that's the case, are you already seeing signs of that in the first 27 days of the month of January?
During first 10 or 15 days of January, it is basically a season where people don't buy Shraddh and things like that. And after Pongal and after some festivals that are there at regional level, Sankranti and all those things, things are looking better as far as January is concerned. Q4, we are expecting that with BS4 inventory being there, things would be smoother in the sense that the vehicle would be available, customer would be willing to buy these vehicles because there's a price benefit as far as BS4 vehicles are concerned. At the same time, BS6 is getting launched. The indication that we have from the OEMs is that around Feb and March, BS6 vehicle would get launched fully for all the OEMs. So we are expecting that the transition that is there should be smoother, but we are seeing that in January it is actually better than November and December that we have seen. So in terms of, if you ask me how the growth trajectory has to be in Q4, it would be, we are expecting about 40 lakh vehicles that would get sold. It should have been 45 or 48. Against that, we are seeing that about 40 lakh two-wheelers may get sold in Q4, including the Euro 6 vehicles that's going to get launched around Feb and March.
Okay. Now, talk to us also about what happened to asset quality in the quarter gone by, Madhu. Your quarter 2 gross NPAs, that is the net NPAs on a YOY and a QOQ basis, I think had inched up a bit. What's your sense about, I mean, how did quarter 3 fare, and what's your sense about asset quality in quarter 4, even if the rest of the next quarters are difficult to predict right now?
In fact, Q1 generally there is a spike in as far as NPAs are concerned, especially in retail finance industry. April and May month is generally not that great. And whatever spike happens in Q1 is recovered during the Q2. But this Q2, and we had been, We've been telling that there were a lot of issues related to natural calamities, floods in Kerala, floods in Karnataka, Maharashtra. So Q2, the expectation during the September that we will be able to reverse the NPAs did not happen. But in Q3, we have seen that it has really improved. The net accretion to NPA for us was around 10 crores in Q3 value-wise, and net NPA would have grown by about 3 or 4 crores. So that's a good sign that the reversal, what we were expecting in Q2, has started happening in Q3. And while we get into Q4, we are very confident we should be able to come back to lower levels somewhere, what we would have done in June, just lower than that. Q4 definitely we are expecting that the collections would improve. There's a lot of initiatives that we have taken on collections perspective. We have stayed invested in all our touch points. So we have not withdrawn from any of the touch points. So actively teams are there, collection, sales, everything is there. So we are expecting that things would look much better. Q3 our NPA stabilized, net accretion was lower. Q4 it would further go down. So we are very confident as far as quality of asset is concerned.
Okay, so I'm guessing the sum and substance of this is that asset quality could likely, in all probability, look better as the quarters go by. At least quarter 4 will look better.
Yes, and moreover, the denominator had been constant for us, and we consciously have said that we'll go very conservative till we see the signs of recovery in terms of overall sales of two-wheelers. So denominator also would have been constant. So that's another reason why the percentage would look slightly higher. But value-wise, net accretion has started reducing.
Madhu, before I get to the year ahead, just a quick question on how do you expect, what's the kind of guidance, if at all it's possible to give for FY20? How do you expect to end the year with? On key parameters, on key numbers?
I beg your pardon. Can you just?
I was asking, how do you expect FY20 as a year, the March ending, to be like on key parameters, NII, asset quality, bottom line, any guidance that you can give us?
In terms of, I can give you a broad parameter in the sense that it would be too early to give you, year-end figures. In terms of overall sales that I said, Q4 we are expecting about 40 lakh vehicles that would get sold. Our market share had been about 1.6 to 1.7%. We have continued that. In fact, we have improved our market share. Our finance share is about 4.5%. So we'll continue that. We expect that we'll continue to do that that number, which is about 70 to 75,000 units. So out of on an average 25,000 units is something which we are expecting we'll do. Close to we are expecting about 500 plus crore disbursement as far as two-wheeler loans are concerned. So any parameter would be linked to that. In fact, with the sale that we are seeing about 40 lakhs with market share of 1.7%, we are expecting that we should be able to close this year with not much of degrowth versus the industry. Industry degrowth is about 18%. We may not have that much of degrowth. That's the immediate figure that I can share right now.
I'm guessing from whatever little we've spoken thus far, Madhu, and the last couple of questions, is that at the end of quarter 2, because of the uncertainty in the environment, you had on stated parameters said that you're adopting a cautious approach. You seem to be now shrugging that off. Is it a factor of the industry having bottomed out, or is it a factor of you believing that the environment at large is changing in the rural area?
So I'll divide it in two parts. One is from industry perspective, and second from how the rural India is behaving. From the industry perspective, there were two cautious approach that we had taken. One, that few players were vacating the market. Do we want to gain the market share there? And our thought was that the customer profile that they fund and the customer profile that we are looking, that is entirely different. So we may not aggressively pursue those markets. At the same time, our internal risk assessment on certain areas where we think that market is good, we have aggressively grown there. 15 to 20% is the growth where we wanted to grow. We have grown. So from industry perspective, we have seen players vacating the market. At the same time, the confusion of BS4, BS6, we wanted to wait for that till Q3. As of now, we feel that now the confusion is slightly getting over because all the OEMs have come out very clearly telling that by Feb, they should be able to dispose of their BS4 vehicle and they would be able to launch the BS6. So we are, the initial expectation that whether there would be a pain as far as Q4 is concerned, we are seeing that the transition would be smoother. So we are very confident in funding those vehicles, whether it is BS4, whether BS6, we are very confident. We have our strategies to do that business. From rural perspective, yes, we had seen slight stress as far as rural cash flows are concerned. One of the reasons, impacting our collections, our collection cost, which we are seeing that it is reviving back. Generally, around Q3, Q4, rural economy is slightly better because agriculture comes to market, the finished products comes to the market, they are able to sell their crops and revive their cash flow. So traditionally, Q4, around Q3 end and Q4, the rural cash flows are much better, and it flows into Q1 and Q2 also. So two-wheeler industry generally, Q4, Q1, Q2, they do really well, or rather H1 does very well for two-wheeler industry. So we are seeing that rural economy would look better for us as we go forward, and so that confidence that how the industry is going to behave, whether it would be in a confused state or not, and second, how the rural economy is going to behave, both are positive for us, and that's why we are saying that we'll grow our books very aggressively. We may shed our conservative stand as of now, but as I said, we have internal way of looking at which are the good markets, grow there, green markets, grow there aggressively, and we'll follow that risk policy, risk mechanism.
Madhu, one final question. What about the borrowing costs? How are they shaping up? What about credit in the system? How easy is it for you to get the monies that you may want, even if there is demand?
As far as supply is concerned, supply is not an issue. Cost of funds is something which we are, it would be great if it can come down. But the thing is that we are not seeing not more than 10 or 5 to 10 bips coming down, that I have maintained during our last discussion as well. As far as till this financial year end is concerned, 5 to 10 bips is something which we are seeing it would go down. Encouraging thing is from a securitization perspective, we did a recent securitization of about 145 crores. We were rated AAA by CRISIL. That portfolio was rated AAA. So those are encouraging signs that people are liking our portfolio. They want to lend more to us given our portfolio. Those are very positive signs. So as far as supply is concerned, we are not really worried. Cost of funds, yes, the aspiration is to reduce as much as possible. As we close the year, not more than 5 to 10 bips.
Okay, thanks for that candor, Madhu, and thanks for speaking to us today, and all the best for Q4 as well as the times ahead.
Thank you, Neeraj. Thank you very much.
That's Madhu Alexiouse of Muthoot Capital.